Now that we have our totals for each account from analyzing our business transactions for the month of August, we can use those ending balances to put together our 3 financial statements. So we always start with our income statement, and we also need to look at our accounts, labels, and amount descriptions tab. So in that tab, it's going to list all the account names that can use, the labels that we'll have an option of, as well as any amount descriptions. So we start off with our income statement. And again, in Cengage, it's always going to give you a little bit of guidance in the cell. So you'll see in the first heading, it says a label, which means that in that tab under labels, we have 3 options to choose from to put into that cell that we need. So in our income statement, our heading for the date is always representing the period of time that the numbers in our income statement are representing. So in here, we're going to type in for the month ended August 31st, 20Y9. Remember, this is the first month of this business running and operating. So we click into that first cell and it says it's an account. So we need an account name. So if you think about the grid, we're looking at those top labels that we have where each one of our account names are listed. So our income statement represents our revenues and expenses. We know in this problem that our revenue account was our sales commissions. So we enter that one in first, and at the end of the month, we had earned a total of $41,000 in sales commissions. We next need a label. So if we look back, we have 3 different label options. Next on our income statement would be all of our expenses. So that is what we're going to list here, is our expenses. Remember, our expenses are listed in order of greatest to least, with miscellaneous expense coming last. So utilizing that grid that we just completed in part 1, we come to the bottoms to look at those balances. And again, if you need your account names, they're also listed here as well. So our most expensive expense was our salaries expense, and it was at $4,300. The next most expensive expense we had was an auto expense at $3,150. Then our rent expense at $2,600, followed by our supplies expense, representing how much in assets we have used during the period of time. And then last but not least, we always list our miscellaneous expense, and that was at $1,700. So remember, on our financial statements, we have subtotal and total columns. So we list all of our expenses in that subtotal because we're going to need to add them together in order to get to our total expenses. So again, line 8 in our income statement says an amount description. So looking here under our amount descriptions, we see total expenses. So we're going to enter in total expenses. And our total expenses here are $12,850. So now we need to determine if we have a net income or a net loss. So our revenues, our sales commissions of $41,000 exceed our expenses of $12,850. So that means we have a net income. And remember, we do our revenues minus our expenses. So we have $28,150 on our income statement. Don't forget that we need the last line item from each financial statement in order to complete our next financial statement. So our next financial statement that we are going to complete is our statement of stockholders' equity. So it's going to show the change in our 2 accounts, our common stock and our retained earnings. So for our label, once again, our date is the same as our income statement for the month ended August 31st, 20Y9. So we need an amount description. So we come back here. We're going to look at our balances as of the start of that period. So again, we're only looking at it for a month. So we need our balances as of August 1st, 20Y9. This is the first month that this business was established. So this company was established on August 1st. The only way that we would have beginning balances is if there was something left over from the previous month to start the next month with. Well, last month, this business did not exist. So we have 0 to start our beginning values for our common stock, our retained earnings, and in total. Next, we now have another amount description. So looking at that information, we want to look at our issued common stock. We did issue common stock during the period of time. So if you look at your grid, we ended our common stock with $22,000. So our common stock increases as well as our total. We also had a net income for the period, and our net income affects our retained earnings. Remember, last line item from the previous financial statement affects the next. So $28,150 also goes in our total. We also need another amount description that they have for us here, and they are telling us that they want us to put in, for anything that has a negative number, to use a minus sign. So we need to write in our dividends, and dividends affect our retained earnings value. So in total, we had $3,400 in dividends that affect our retained earnings, and we enter those as negative values. So that's going to get us our balances as of August 31st, 20Y9. So we have $22,000 in common stock. For retained earnings, we're at $24,750, which in total we have $46,750 in total stockholder equity. Now we're going to need that final line item in order for us to complete our final financial statement, which is our balance sheet. So on our balance sheet is our accounting equation. It's our assets equals our liabilities plus stockholder equity. And remember, when we're doing our heading for our balance sheet, it's always as only one particular day. It's the last day of the month or year that we are doing this financial statement. So we have our assets, our liabilities, and our stockholders' equity. We always list our assets in order of liquidity, so cash is always listed first, and we had $46,450 in cash at the end of the month. And we had supplies of $800, so we got to add those two together to get to our total assets of $47,250. We had one liability account, and that's accounts payable that we owe. And we owe, at the end of the period, we owed $500 to someone else. Stockholder equity, again, if you look at your title of your balance sheet, it's as of August 31st. So we want those values from our statement of stockholder equity, not as of August 1st, but of August 31st. We're pulling from the end of that statement. So we have our common stock, and at the end, we had $22,000 in common stock. We had retained earnings in total of $24,750. So we had total stockholders equity of that $46,750. And that gets us our total liabilities and stockholders equity. When we add that $500, we get to the $47,250.